We finally did it. We got over 3,000 homes on the market. First time since November of last year. I'll tell you what this means for San Diego and give you more insights on what it was this time last year. The market is still reactive to last week's Consumer Price Index, AKA the CPI report. I'll share with you about how the language of real estate may change and what you can expect to hear. So you think it's expensive to buy? Well, you're right. How expensive is it to rent though? Let me put it this way, it isn't getting any cheaper. I'll update you on the San Diego rental market and what you can expect with the forecast of a challenged market ahead of us. This all covered here in this week's Market Matters. I'm Karl, your San Diego Realtor. Let's jump into it. Real quick, if you appreciate the information I provide in these videos every week, it would be appreciated if you would subscribe to this channel and like this video. Now, on to the good stuff. For the first time since November of 2023, we broke 3,000 homes for sale in the San Diego real estate market. Maybe this makes sense since many people tend to pull their homes off the market during the holidays and wait till spring before selling again. Just so happens an article posted on Realtor.com in late March says that the week of April 14th through the 20th is the best time to sell. Realtor.com suggests that the best week offers higher buyer demand, lower competition from other sellers, and fewer price reductions than the typical week of the year. In addition, Realtor.com says that homes get 18.4% more views, median prices are up 1.1% higher than a typical week, and homes sell about 17% faster than an average week. Take in consideration that the data Realtor.com is pulling is national. These claims are consistent with national data, but it isn't always going to be accurate when you go micro and start looking at individual metros. As for San Diego, we saw an uptick in inventory, so that would actually lead to more competition for sellers, not less. At the same time, the market was hit hard with an increase in interest rates, so buyer demand may have shifted a little bit. Regardless, the uptick in inventory is a good sign for buyers, especially compared to this time last year. Last year, we were barely carrying over 2,100 homes on the market, almost 30% less than we are now. We still have a long way to go until we fully recover though. Pre-pandemic, we were sitting around 13,000 homes on the market, and if you recall, we still had a pretty hot market back then. Now, it was nothing like we experienced in 2021, but it was still a hot market. For context, buyers are still in a pretty crappy position. There aren't enough homes in any one area, so buyers are having to expand where they're open to living to multiple areas all over San Diego. At the same time, they're having to adjust their wants and needs in a home if they really want to buy. Now, if you're thinking of selling, it would be in your best interest to consider other comparable areas to yours. For example, a buyer that wants to buy in Claremont is also going to look in Linda Vista and Serra Mesa. This does not suggest that all these areas are the same value. What this means is that those areas are your competition to a degree. In last week's Market Matters, I shared with you the recent CPI report and how it was higher than expected and how inflation was starting to show a possible trend upwards again. The markets flipped the freak out and now our interest rates are in the mid 7% range. Prior to all this happening, it was expected that the feds were going to cut rates 1 to 3 times by the end of the year, but that's not looking as likely now. Still possible, just less likely. Now, previously, you probably heard a lot of agents and lenders telling you to buy now and refi later into a lower rate down the road. Can you guess how that may change going forward? If the feds don't hit the target inflation rate of 2% while maximizing employment, then it's very likely that we won't see a rate drop anytime soon. As a matter of fact, it's becoming increasingly possible that rates will continue to rise. If that happens, the narrative around buying will flip to buy now before rates go up. Crazy, right? It's not to say that this is wrong. If rates go up, who knows how long it'll take for them to come back down, and what will they even come back down to? If you take anything away from this video, let it be this. Buy based on the rate at the moment and make sure that your finances are super dialed in. Buying out of fear or hope is risky to say the least. If you ever want to jump on a call and do a brief run through of your finances, I'm happy to do that. In addition, be mindful. If rates go up and prices hold, renters are going to be in a world of hurt. And while on the topic of rents, let's jump into the last topic for this week's San Diego Market Matters, the San Diego rental market. If people aren't complaining about our prices, they're complaining about our rents. NerdWallet posted an article titled Rental Market Trends in the US. Price growth slackens, but inflation data still not showing it. They followed the title by referencing a 3.6% increase in asking rents as per reported by Zillow. They suggest that the reason we're not seeing inflation coming down is because rents are increasing and that shelter takes up a large portion of the consumer price index. This is the metric used by the market to measure inflation. It's never been more expensive to be a renter. Harvard conducted a study and found that in 2022, half of all renters spent 30% or more of their income on rent and utilities. Can you even imagine that? The government takes a third of your income, a third goes towards your rent and utilities, and you're left with a third to live off of and still invest for a rainy day and retirement? This increase in rent is consistent for San Diego as well. On Zillow, a 3-bedroom detached house in April of 2023 would rent for about $4,300. Fast forward to today, and it's $4,464. That's an increase of $164. And something similar happened with 3-bedroom condos and apartments. Rents went up $261 since this time last year. And check this out. Zumper, a national rental platform, collected and posted the cost to rent a 1-bedroom in various cities in San Diego County. Coronado being $3,900 for a 1-bedroom, with El Cajon being on the lowest at $1,780 for a 1-bedroom. Now, though rents are up from 1 year ago, many sources are reporting that rents have consistently come down for the last 5 months based on new data of homes going up for rent. Now, this could be seasonally affected though, so it would be interesting to see how these figures pan out over the summer. Regardless of how much rent has gone up over the last year, it is still more affordable to rent than owning a home of similar size, and this is consistent in 95% of major US cities as per a 2023 rental affordability report by Aton. So as much as it may suck to rent, it's still cheaper than owning based purely off of payment. Now, to close things out, here's some interesting stats. 40% of homeowners are baby boomers. About 52% of millennials are homeowners, and almost 75% of renters are Gen Z. It makes you wonder, how will Gen Z ever get into home ownership? Or if they'll ever want to. Renting costs less, isn't permanent, and as you rent, you are not responsible for the maintenance or any repairs on the property. Now, that's a wrap for this week's San Diego Market Matters video. If you found this information valuable, be sure to hit the like button and subscribe to my channel for weekly updates on the San Diego real estate market. And if you're considering on selling or buying anywhere in San Diego, don't hesitate to reach out to me for expert guidance tailored to your needs. As always, I'm Karl, your San Diego Realtor. I'll see you next video.